Well, welcome to Financial Strategies Unleashed, a podcast by Concenture Wealth Management. I'm Robert Gilliland, and today
I'm Mike Alexander.
And we're both with Concenture Wealth Management here in Houston and in Dallas. And today what I thought would be a great topic for us to talk about is entrepreneurs and what should they be thinking about building wealth. Something that's interesting is that there's a designation called the Certified Exit Planning Advisor, and that walks you through the process of how do you go through to create value. And most entrepreneurs are all about building that value. And so as entrepreneurs are going through and building that business, their mindset kind of changes, right? And most of their net worth, most of their investments are tied into one investment that, quite frankly, they have the most control over. And let's talk a little bit about the mindset of an entrepreneur and the things that they think about in the way that they go through to run business.
Yeah, I think there's if you're running a business on your own, it's multifaceted, right? There's a lot of different things that you have to be able to manage. It's everything from managing the human resources side of the business, whether it's adding personnel or subtracting personnel. You have to think about day-to-day cash management. You have to think about inventories, budgeting, all of these various things that are associated with the actual business itself, and making sure that the business is operating efficiently. Over and above that, of course, then you have all of the, again, the financial aspect of what it is that you're doing, and those are things like, again, the cash management and investment of resources, but also things that are maybe more long-ranging. So things like succession planning or business valuations or mergers and acquisitions or financing costs. So there's a lot of different things that come into it, Robert.
What's interesting is that when you go through the SEPA program, you just hit, knowing that you're not a SEPA, you just hit really the three-legged stool, right? So an entrepreneur, and most of them fail at one or the majority of these. There's really three facets to it. One of them is the business aspect. How do I go and grow revenue? How do I go and make this business do more? How do I gain market share? How am I controlling my inventory? There's the financial aspect of it. How much am I paying my employees? How much am I getting paid? Am I making money? And then there's the personal aspect of it, right? And what you find is that all entrepreneurs need to be thinking about how do they add value. That value on the business side. Can I make this investment in this piece of equipment or in this process or in whatever? How can I create value with that? How do I create value on the financial side? How do I make my business worth more? And then you have the personal side. And the reality is most business owners or most entrepreneurs end up being aware of all those, but not necessarily have a plan in place for all of those, right? I mean, we sit down all the time with entrepreneurs and they say, yeah, I want to sell my business. But understanding what that's worth becomes a really big question.
Oh, I can only imagine. I think one of the things that we talk about a lot, Robert, is that people that run businesses are exceptionally good at running their business. That's what makes them so successful. There are elements of the financial side, though, that sometimes that you're not necessarily always you weren't really counting on necessarily, right? And so those might be things like a change of the business environment, which requires a merger, or a change in the regulatory environment that triggers a change in your business. And so there's just a lot of different things that I think can play in. I think as we were talking about earlier, is when as an entrepreneur gets a little bit older, they kind of have to their mindset again changes. Is okay, what was the purpose of this business to begin with, and what if I don't have a succession plan? What if what if something were to happen to me? What am I supposed to do to make sure that this is an ongoing entity? Because I may have people that work for me or work the entity that their whole livelihood is based on that. And so there's a lot of people that start counting on you to make sure and make things happen.
Yeah, when you go and you look at it, right? So you look at those pieces, and when you start down this process, most people go through it with going and saying, okay, I'm going to sell it. Okay, I'm going to give it to my kids. Or, okay, I'm just going to close the doors. Well, there's a lot of things that have to happen, right? And it all starts with having an all-encompassing plan that looks at, in an ideal world, I would go public. Every entrepreneur wants to take their company and go public, right? The reality is the vast majority of those don't go public. And by the way, going public may not be the best thing for them to do. On the personal side, it makes a lot of sense. We sit down with entrepreneurs. The thing that is interesting that I ask them, because in fact just last week had a meeting with an entrepreneur, actually ends up he has 2 businesses, and I asked him what he did for fun, and he says, I work. That his identity and everything around what it is that he does, and he's got 2 very successful businesses, is about the job. He has no hobbies. He doesn't hunt. He doesn't fish. He plays golf when he has to, when he's required, right? But it is not something that he's passionate about. He's passionate about running these businesses and building and making these businesses successful. And I think a lot of entrepreneurs don't look at what that end goal is.
Right. Right. What is it? Yeah. What does it mean? What does it mean for him if that business is no longer viable, or for health reasons they have to decide they're doing something else, or maybe there's just an opportunity to monetize it and turn it into something something much larger for them, financially, vis-a-vis a sale or again an acquisition. So maybe that's something that they actually have to think about that they haven't done so. So
a lot of times too, when you go and you look at those business owners, those people who are running these businesses that they started, that's knowing that that's our identity. There are a lot of cases where both spouses are intimately involved in the relationship, but there are a lot of them also that only have one spouse that's in control of that, right? A lot of times one of the spouses will raise the kids or has another job or going and doing something. And when you're that entrepreneur and you no longer have that office to go into every day, how's that going to work? What do you want to do? Do you want to travel? What sort of legacy do you really want to start with? Then on the financial side is, what does that cost, right? What should you be doing what should you be doing to hit that goal when that second dance happens? And I think pulling all that together makes a lot of sense. Let's talk a little bit, something that entrepreneurs probably don't pay a lot of attention to, or actually they pay a lot of attention to it because it's cash flow. It's all about that movement of money and where that is. What are some things that business owners can do with regard to cash flow that they should be aware of to go through to look at, to ensure that they're managing the business the right way?
Yeah, I think from a cash flow perspective, I think one, you'd rather not have capital that isn't doing something that's productive for you. And so, to a certain degree, I think, having this ability to bucket cash flow and proceeds and actually make sure that it's dedicated to the proper source or dedicated to the proper purpose. Right. And so, a lot of times, again, you have short-term cash needs, and then you have needs that may be a little bit further down the line. And the result of that is that you can deploy those assets based on what the purpose is likely to be for those, and then you constantly monitor and adjust based on what's happening within the business and what your cash flow needs are. I would say that a couple of years ago, again, when cash and money markets were paying zero, I don't think there was any penalty, right? There was nothing, nothing happening essentially with any excess cash flow that was flowing to the bottom line. I think has changed significantly in an environment where money market funds are paying 5%, and so the idea is to make sure that you've got as much capital working for you and that it is deployed effectively in a way that not only combines the investment outcome that you're looking for, but also whatever liquidity needs that the business has as well.
Yeah, I think that's a really big point right now, is that treasury management becomes vitally important. One of the things when you talk about cash flow, that a strategy that I've heard is that you really, using your phrase, bucket these funds, right? So you've got your payroll. That's its separate account, and every month when revenue comes in, money is moved over to cover the payroll, and you build a little bit of cushion inside of there. Then you've got your taxes. Every month revenue comes in and money goes into that tax account. Every month goes into future growth or marketing or some other sort of expense, and you kind of have these different accounts that are set up. And it's very, very simple. At the end of the month, the money comes into this account and it's all divvied out, and whatever's left over goes to the owner in the form of earnings that gets paid out. The owner's the last one that gets paid. That's inside there. Intuitively, that makes sense. I'm not certain, because the reality is that I'm not certain many people are doing it, because each one could actually have an opportunity for that money to work a little bit harder. In a high inflation, you're losing that buying power of those dollars.
Absolutely. Yeah. I mean, it's an environment that I think for a lot of business owners, they haven't had to encounter for a while, again, because interest rates were just, they were so rock bottom low that, they didn't really even have to address it. If it was cash, it was cash, and there was no reason to try to even look for anything, because it simply wasn't there. And so I think that's created a different environment, something that perhaps a lot of business owners maybe they haven't even explored what the opportunities for that are, and and perhaps what they should be doing.
One of the things, going to the financial aspect of it, right, for a business owner in their personal finances, a lot of business owners will have a 401k, because at the end of the day, when you're starting a business, that's kind of table stakes. Everyone wants some form of retirement plan to go to work. But that financial management is a lot more for that business owner, right? Because like I said, the vast majority of their net worth is tied up in that company. If you were to have 99% of your net worth tied up in one company, XYZ company that's publicly traded, you might realize there's a little bit of risk with that. But that business owner is comfortable with that because they control all the aspects that are there. But that business owner really also needs to be thinking about, with this extra cash flow that's coming to me, what should I be doing with that, right? What should I be doing inside of there? When you go and you take it on the personal side, to kind of transition a little bit, which, by the way, I think that most business owners, with the way that 401ks have changed, most business owners, though this would be low on their priority, should have a review of the 401k and the benefits that they're offering to their employees. Things have changed and costs have come down significantly, and there may be better choices and options that are inside there.
Yeah, without a doubt. Obviously, within the retirement plan space, again, as you mentioned, costs have gone down. You don't typically see these arrangements where somebody's is paying an expense ratio of as an example, and so that you've definitely seen some changes there. I think for a lot of business owners, just like they would review the other aspects of their business, I think the retirement plan aspect of it is something that they want to make sure that they're reviewing. And I think to a certain degree, from a fiduciary standpoint, I think you want to make sure that you do it.
Right. The biggest area, and I find this kind of surprising actually, is that sitting down across from a business owner and say, let me ask you a question. Assume it's one business owner or one family that owns the LLC. And you say, Mr. or Mrs. Business Owner, if that proverbial bus ran you over yesterday, because we never talk about a bus running you over tomorrow. We don't want that bad juju. We want it happened yesterday, right, since we know it didn't. That proverbial bus ran you over yesterday. What happened to this business? And I'm always shocked that the response is, well, my family would take it over, or I don't know, my number 2 guy would step in.
Right.
You know, business owners really need to be thinking about what needs to happen, what would happen, and what sort of tools or mechanisms or vehicles can they put into place to ensure that their family's taken care of.
When do they need to start thinking about that? I mean, we run across, business owners of various ages, right? And everybody has a different plan. There's people that want to sell their business at 50 years old and walk away. There's people that, want to be there, with their last breath, So, but when does somebody typically start thinking about, succession and what's next for me? Is that just an ongoing thing, or is it, I mean, maybe you know the answer better than I do.
Well, I don't know that there's necessarily, my opinion is I think it all depends on the business, right? If you are a sole practitioner and you're a sole practitioner, you don't have any employees and it's just you and the business and it's successful. Let's say that you are a wholesaler. So in other words, you are importing goods and turning around and distributing them out to other people, and you don't even take delivery of it. It just gets directly drop shipped. I think that one's different. It's not that there's necessarily a tremendous amount. There is value, but there's not necessarily a tremendous value on the business. Therefore, the way that business owner needs to think about it is, if I'm a younger entrepreneur and something were to happen to me, would my family be okay? Well, there's a way that you can cover that. If you have a partner or key employees, you can have buy-sell agreements that are in place where my number 2 guy would buy the shares from my family inside there. And you can utilize a lot of different vehicles to go to fund that. I think that there are a significant number of entrepreneurs who kind of keep a lot of the secrets to themselves as to what's happening. And I think that making sure that you have that number 2, that if that proverbial bus ran me over yesterday, business can continue to go to happen
right today. Right, because you have customers, obviously, that are counting on you, but certainly you have employees that are counting on you and their families as well. So it seems like that would be a part that would, perhaps get overlooked, or, a lot like, for, people that do estate planning or planning a will. It's just one of those things that you'd rather not do if you don't have to.
Right.
And so you're always thinking of what else can I be doing so that I don't have to address that.
Well, I saw a statistic in this one industry that said that 94% of business owners in this industry wanted to transfer or wanted their assets, wanted the business to go to the next generation.
Wow.
94%. 87% said the next generation wasn't anywhere close to being ready to take that business over.
Wow. Wow. I mean, I think those statistics are obviously very telling, and clearly, perhaps where there's a void, right, is how do you get that next generation ready, even if they understood, certain elements of the business. As we both know, there's a lot of different things that have to occur to make a business operate efficiently and profitably, and it's not just whatever it is that you make or sell. There's all the other components as well.
Right. Let's step forward a little bit here, and that is what is some of the ways to have a liquidity event? So I've run this business. It's a successful business. I have 35 employees. We are humming along. Things are going well. What are some of the things that should be thinking about if they're thinking about exiting?
Yeah, I mean, I think if somebody's thinking about exiting their business, there's only really a handful of ways that are going to happen. Again, aside from the proverbial bus hitting you yesterday, right? Which we certainly don't want that to happen. But I think there are certainly mergers where they merge with a similar business that maybe has a similar culture or similar products or similar employee base or customer base. So there's definitely those opportunities. There's going to be opportunities where a business might need a business valuation. That is really, again, a formal look at the company to say if this business were to be, on sale tomorrow, for sale tomorrow, what would it be worth? What's a reasonable,
what's a fair multiple?
Yeah, what's a fair multiple? What should I be asking for this business? And I think back to the earlier point that you were talking about, if there is, most companies, clearly are probably not going public, but there are certainly going to be a bunch of them that that need that next generation to step on board. And what does that mean? Obviously, there's partnerships where they may have insurance needs with buy-sell agreements and whatnot to actually make sure that some of these things happen in case one partner wants to walk away from the business or has a desire to do something different.
So as you go through and you look at this from an entrepreneur, from what sort of where they are kind of in this, what's interesting is that when you go to think about it, there's really 3 phases, right? So you get your business up and running. Let's assume we got a business that's up and running. It's past 5 years. You've got something that's going and growing. Really what you have is these 3 phases of creating this value is first go and build that plan that evaluates the business aspect of it, the plan that evaluates the financial aspect of it, and the plan that evaluates the personal aspect of it. That's stage 1. Stage 2 and 3 is going through and executing on these plans. Where are we short? Do we have enough coverage in the case of life insurance? Do we have the right retirement plans in place to attract the right employees? Do we have the right business plan in order to go and grow so that we can get the highest multiple? Once you've gone through those stages and you're keeping score along the way, what happens is you can go and you can get to a point and you go and you check. Hey, look, am I ready to check out, or are we going to keep on growing? I'm going to keep growing. Go back to stage 1, reevaluate, see where that is, evaluate where your plans are, execute on those plans, look at all these different details, get a coach to help manage and monitor that, because you've got your financial planning, you've got your legacy planning, you've got your cash management, you've got your investment planning, you've got all the different pieces that are inside there. If you decide to sell, then your choices are pretty simple, right? Mm-hmm. Your choices are put it up for sale, get an investment banker to come and bring people to you and say, hey, I'll give you the X dollars. Close the doors, sell all your inventory, walk out, tap out, you're done. Or if it's about a succession, moving it to the number 2 or keeping it inside the family, what sort of process are you going to have in place to go through to execute that?
Yeah, and to me, that's actually one of the more, maybe it's one of the more common ones, but also one of the more fascinating ones, just because you don't typically see a business owner who's been working 7 days a week who all of a sudden says, hey, I'm not going to come in anymore. I'm only going to work one day. It's typically kind of a slow transition where they go from, all right, I've been running this business 7 days a week, 24 hours a day. Now I'm going to step back and it's going to be 5 days a week. And then it's going to be 3 days a week. And just slowly kind of moving, that whether it's the next generation or another partner, just kind of slowly transitioning them into that business.
The thing that's interesting to me is with several clients that we have that sold their businesses, what's really interesting, in one case in particular, the business owner sold it, got a fantastic multiple. It was one of those can't say no to. But he's paid attention to what's happened with that company and the new company and all the changes and transition and things that have happened. The business owner who sold, takes offense to the way this new person is managing and running this business. It was his baby.
Right.
And now they're going and they're doing this. They're not taking care of the employees the same way that I did. They're not offering these incentives. Processes aren't all the same. And that business owner takes offense to that. And I think it all boils down to what sort of legacy do you want to have in place if and when you decide to exit the business?
Yeah, I mean, I'll tell you, Robert, a fascinating story kind of along those lines is, and I can remember this from earlier in my career. I was traveling. There was, I was eating, lunch at this restaurant, and we happened to meet the owner of the restaurant. Well, this particular restaurant was bought out by a very large chain in North America. And they kind of changed the menu around and changed, kind of the look and the feel of the restaurant. This restaurant had a really good, loyal following, and they paid him a premium, as they should have. They paid him a premium because he had this great franchise of business and customers, and the larger entity did not do a particularly good job of running it. And in this particular case, that individual came back and actually bought it back from them at a significantly lower price than where he sold it to them. So it's just a fascinating story of how somebody can win and then win again operating the same business. But it just goes to show you that there's just a lot of different things that can come at you if you're a business owner, and a lot of different opportunities that can present themselves.
So in working with our business owners, what are the one or two things that you think that the business owner, when they're going through, and you think of it from a financial standpoint, that they neglect the most?
It's a great question, Robert. I think that for a lot of business owners, and I think you've said this very succinctly earlier, and that is that they're so tied up emotionally in the operation of this business that sometimes, they kind of forget to kind of take a step back and say, what does this mean for me and my family financially, and am I addressing some of those various things along the way? Because again, running a business is more than a full-time job, and so it's very easy to kind of forget, what does this mean? What does this mean for my family? Am I going to have to find a successor? Am I going to have to pay estate taxes? Is my business so valuable that I've overlooked, this element of the business that maybe I really need to be paying attention to? Because if something does happen to me, I want to make sure that my family is protected. And so those are the types of things that I think are really front and center for a lot of business owners that are easy to forget.
I agree with that. I think that after I asked the question, I was trying to think, what in the world's my answer going to be, right? And so as business owners, I think one area that they neglect is the effective management of the assets, meaning that a lot of business owners I know, a lot of our clients maintain a lot of cash that's maybe not necessarily as efficient as it can be. I think that a lot of business owners try to figure out ways that they're going to circumvent taxes, and unfortunately, there's just not a lot of ways to do that. And I think realistically, the thing that I tell a lot of business owners is that step back, pretend like it's not your baby. Look at what the facts are, and knowing what you know, if you were not emotionally attached, what changes or adjustments would you make? I think that when you're looking at the operation and the running and the building of the business, makes a tremendous amount of sense. I think that when you're looking at an exit strategy, or how am I going to build this? I'm an entrepreneur. Clearly, it's about building something great, right? I think where a lot of business owners fail is on the planning and the execution, because it's so much easier just to go back in and get back to go back to what you know, building these widgets, designing these widgets, whatever. And I think that business owner fails to step back and plan and have very logical kind of milestones that they have to go through to get there.
Yeah, I mean, it sounds like from what you're saying, I think one of the things that, again, as an entrepreneur, you're used to kind of doing things yourself, right? And taking a great deal of responsibility. So maybe the real thing that they neglect is getting help where you need it, and it's and maybe struggling with who do I ask to get that help.
I'm glad you said it that way, because The number two thing that I would say, since I said one or two things, the number two thing that I would say is making sure that your team your team is working together. Now, what is your team if you're an entrepreneur? Well, it's your accountant, it's your attorney, your business attorney, your estate planning attorney, your financial advisor, your banker. That team needs to have a quarterback, someone who's a certified exit planning advisor, someone who understands what they're doing, someone who can pull in that investment banker, someone who can pull in a business broker, someone who can pull in financing for you if and when you need it. And if they all sit around the table and they all understand where you're going and you have your team in place and everyone's coming with one goal, and that is to help business get to where the owner wants it to get to. If everyone's around that table to go through to structure that and to go through to give ideas and things in there, then that business ends up being much more successful. It ends up lasting. It ends up being more profitable. When businesses, there are plenty of studies out there that when businesses focus on building value, and everything that they do is about building value, and so they have processes that are in place and things like that, they end up becoming significantly more profitable.
And that's a good thing.
Yeah, kind of. I think kind of right there, it's a pretty good place to stop our today. Ready for next week. Please, if you've heard this, after listening to this, share this with that next business owner that you know that maybe hasn't taken the time. Make sure you're sharing it on the socials, and most importantly, make sure you like and subscribe this. We really appreciate everyone taking the time to listen to it, and we'll see y'all next week.
Look forward to seeing you next time. Thanks.
All right, so let's take care of some legal stuff. As a representative of Sanctuary Securities, Inc. and investment advisory representative of Sanctuary Security Advisors, LLC Securities, offered through Sanctuary Securities, member FINRA and SPIC. Advisory services offered through Sanctuary Advisors, LLC, an investment registered investment advisor. Concenture Wealth Management is a DBA of Sanctuary Securities and Sanctuary Advisors, LLC.
This podcast is for informational purposes only and is not intended as an offer or solicitation with respect to the purchase or sale of any security. The content is developed from sources believed to be accurate. No warranty, express or implied, is made regarding the accuracy, adequacy, completeness, legality, reliability, or usefulness of any information.
Opinions expressed are subject to change without notice and are not intended as investment advice or to predict future performance. The views expressed herein are not necessarily representative of Sanctuary Securities, Inc. or Sanctuary Advisors, LLC, and should not be interpreted as investment advice.
Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit against loss in periods of declining values. Past performance does not guarantee future results. Any investment discussed may not be suitable for all investors. Investors must take their own decisions based on their specific investment objectives and financial circumstances. Consult your financial professional before making any investment decision.
No part of this communication is intended to be construed as tax or legal advice. Please discuss your specific situation with a qualified tax or legal professional.